Meta's business has suffered largely due to the economic downturn caused by the COVID pandemic. The financial results were so unexpectedly bad that the shares dropped 25% at one point, taking $240 billion off its market value, which in turn led to a 2% drop in the Nasdaq index. With Mark Zuckerberg's recent announcement of employee layoffs, the situation seems to be going horrible for Facebook. It appears that Zuckerberg overestimated the sustainability of his company during the pandemic, and with investments in VR, the company is finding it hard to cope. Right now, the two technologies that are said to change the digital world are the metaverse and Web3. But Elon Musk, the world's richest man, exposed why Zuckerberg is making a big mistake. But a very important question is, can Facebook survive these problems, or will it collapse eventually? This is a very interesting situation, so let's explain it. First of all, Facebook's revenue losses after pandemic and stock performance was very surprising. In the months from March to June, Facebook suffered a twin blow. Sales dipped for the first time ever, and profit decreased for the third consecutive quarter due to increased competition from TikTok and unease among advertisers. Mark Zuckerberg warned investors during a conference call that the company seems to have entered an economic slump that will have a broad impact on the digital advertising sector. He expressed how the situation felt worse than it was a quarter ago. He said that in order to weather the storm, Meta will cut back on spending and limit its recruiting rate. Adding to this, he said that he anticipates the company to accomplish more with less resources because this time period calls for greater energy. The announcement caused Meta shares to decline, adding to a downward trend that has seen the company's market value almost halve since it announced its first ever decline in daily Facebook users at the end of the previous year. In the 3 months that ended in June, revenue decreased 1% from a year ago to $28.8 billion, a larger decline than Wall Street analysts had anticipated. According to Meta, a 3% rise in income would have been recorded, except for the dollar's strengthening. The company's prediction of $26 billion to $28.5 billion in sales for the current quarter fell short of analysts' expectations as well. To $6.7 billion, profit decreased by 36%. The data from Meta are the most recent evidence of a long-term downturn in the digital advertising sector, as companies cut back on spending in the face of rising prices, interest rate rises, and other economic difficulties. The business attributed its lackluster third-quarter outlook to poor advertising demand, which was fueled by macroeconomic unpredictability. The effects of Apple's privacy measures, which have made it more difficult to target adverts to smartphone users based on their online activities, are still being felt by social media businesses. But according to Facebook's management, the company has a very smart plan to improve the situation. On the 16th of November, Mark announced in a message to staff members that more than 11,000 Meta workers will be let go, or 13% of the company's workforce will be cut down. In the letter, Zuckerberg disclosed some of the most challenging changes the company has ever made at Meta. He expressed how he has made the decision to let more than 11,000 of his excellent workers go, in order to lower the size of our workforce by around 13%. With this, he explained that Facebook is also reducing discretionary expenditure and extending their hiring freeze through Q1 in order to create a smaller and more effective firm. The layoffs come at a difficult time for Meta, which gave lackluster fourth-quarter profit projections in late October, alarmed investors, and led its shares to drop over 20%. The third quarter saw a 19% year-over-year increase in Meta's expenditures and expenses, raising them to $22.1 billion, which has investors worried. In the most recent quarter, the company's overall revenues decreased 4% to $27.71 billion, while operating income fell 46% to $5.66 billion. He said that while recruitment would be disproportionately impacted by the company's intentions to hire fewer workers in 2023, Meta is making cutbacks throughout all of its organizations. With a few exceptions, the business continued its employment halt during the first quarter, according to Zuckerberg. Main problem for Facebook is that, according to Mark Zuckerberg, they had too optimistic development plans and had wrongly believed that a spike in usage and revenue growth during the COVID-19 lockdowns would be sustained. During a company-wide meeting, Zuckerberg responded to a query from an employee by saying that he had hired too quickly and had not planned for the prospect of an economic slowdown. According to insider intelligence analyst Deborah L. Williamson, the company's present business situation leaves it on shaky legs. She said that Mark Zuckerberg's choice to direct his company's attention on the metaverse's potential future benefits distracted him from the awful current conditions, including the fact that Meta is under a lot of strain. Nearly $4.4 billion in earnings were made by Meta in the 3 months that ended in September, and it successfully resisted a user decrease. The number of daily users on one of the business's platforms increased from 2.88 billion in the previous quarter to 2.93 billion in the 3 months that ended in September, according to the company. Even if the US and Europe were not adding new users to the primary Facebook network, it is nevertheless expanding globally. Despite its advantages, many investors worry that the corporation has become disorientated. There are too many people, too many ideas, and not enough urgent challenges in Meta. In an open letter this week, investor Brad Gerstner, chief executive of Altimeter Capital, urged the company to reduce staff and scale back its investments in artificial intelligence and virtual reality, also known as the metaverse. He said that this lack of focus and fitness is concealed when growth is simple, but deadly when growth slows and technology changes. In recent years, Facebook's costs have increased as a result of concerns about how it handled the spread of false material on its platform and user privacy. The business said it was making substantial adjustments across the board to run more effectively, and that it intended to maintain flat headcount during the following year. After payrolls soared from roughly 17,000 at the end of 2016 to more than 87,000, gaining 28% only in the previous year, that would be a significant shift. However, it issued a warning that losses at its Reality Labs division, which specializes in virtual reality, has suffered a sharp decline in revenues, were expected to increase. Despite the skeptics, Zuckerberg said he is still dedicated to the idea. It's also interesting to analyze Facebook's current market direction and projections. Meta is making significant investments in the metaverse, a term used to describe a future virtual and augmented reality environment that is still under development. Meta has lost $9.4 billion in 2022 as a result of this big wager, and the business predicts that losses will climb considerably year over year. Zuckerberg stated that Meta intends to focus our spending on a limited handful of high-priority development areas over the course of the following year during a teleconference with analysts as part of its third quarter earnings release. According to Zuckerberg, it implies certain teams will expand significantly over the next year, while the majority of other teams will stay steady or decrease. Overall, we anticipate that by 2023, we will be either around the same size or even a little bit smaller than we are now. At the end of September, Meta employed more than 87,000 people. Moreover, Elon Musk came out and critiqued Mark Zuckerberg. During a conversation at the TED conference in Vancouver, British Columbia, Musk was questioned on his recent attempt to purchase Twitter. Chris Anderson, the journalist, questioned Musk about the possibility of a conflict of interest given his position as the platform's richest person and leading influencer. Musk took the chance to criticize Zuckerberg. In terms of media ownership, Musk stated, "Mark Zuckerberg owns Facebook, Instagram, and WhatsApp, and his share ownership structure will ensure that he retains control of those firms as Mark Zuckerberg the 14th. Also mentioned by the Tesla CEO was Zuckerberg's control over Meta, the organization that houses Facebook, Instagram, and WhatsApp. Since Zuckerberg owns 55% of the voting stock in Facebook, he effectively has total veto power over other owners when it comes to the future of the firm. Due to the dual-class stock structure of the corporation, Zuckerberg, a small number of top managers, and directors have super voting power, meaning that each of their shares entitles them to 10 votes, as opposed to the ordinary shareholders who are only allowed 1 vote per share. The Tesla CEO also seemed to criticize Meta's management of the moderation process. Both political parties have criticized the social media business for how it handled false information about COVID-19 and the Capitol siege. As long as it's legal in the nations where the platform is used, Musk seems to favor erring on the side of allowing information to be shared. Musk also criticized Web3, a plan to restructure the internet around the blockchain with the goal of democratizing it. With his interview with the Babylon Bee, he said that Web3 was more marketing than reality. That's it for today. Subscribe to our channel and hit the notification bell.